Hello and welcome. Today we're going to talk about investing in silver. Now it can seem a little complicated, so we're going to break it all down by looking at the two main ways you can get silver into your portfolio: holding the real thing versus buying it on paper. So, are you looking to add a little bit of that metallic shine to your investment strategy? Whether you've been investing for years or you're just getting started, the first step is always understanding your options. So let's just dive right in. So, here's how we're going to tackle this. We're looking at two very different paths. First, there's what we'll call the tangible path. That's where you own the actual physical metal. And then there's the paper path, which is all about financial products that track silver's value. Totally different approaches, and each one has its own playbook. But hang on, before we go down either of those paths, let's back up and ask the big question: why even bother with silver in the first place? Well, for a lot of people, it really comes down to finding a little stability in a pretty uncertain economic world.
Okay, so experts usually point to three big reasons. First, it can act as a hedge against inflation. The thinking is, as the value of currency goes down, a real physical asset like silver might just hold its own or maybe even go up. Second, it's a great tool for diversification because silver's price doesn't always follow what stocks and bonds are doing. And third, it's just a classic store of value. It's a tangible thing that people have valued for thousands of years.
All right, let's jump on to our first path, the tangible world of physical silver. This is for the investor who wants to literally hold their investment in their hands.
So when you decide to go physical, what are your options? Well, for investors, the most common choices are silver bars, also known as bullion, and silver coins. Of course, you've also got stuff like jewelry and tableware, but as we're about to see, they're really in a different league when it comes to pure investing.
Now, this is where it gets really practical. If you're looking to make a large investment, silver bars are usually the most cost-effective way to go. That's because the premium you pay over the live market price, what they call the spot price, is generally lower. On the flip side, coins minted by a government are fantastic for beginners or for smaller investments. They're recognized everywhere, easy to buy and sell, and their purity is guaranteed.
And here's that crucial point about jewelry. Even though it's made of silver, it's really not a great pure investment. And why is that? It's simple. A huge chunk of the price you pay is for the design, the brand, and the craftsmanship. Costs you almost never get back if you try to sell it just for its silver content. Now, owning physical silver isn't all sunshine and rainbows. There are some real challenges you have to think about. First up, storage and security. Where are you going to keep it? A safe at home? A bank deposit box? Second, purity is everything. You absolutely have to buy from a reputable dealer to make sure you're getting certified pure silver. And finally, there's liquidity. Selling a bar of silver isn't like clicking a button on a trading app. It can take time to find a buyer who'll give you a fair market price. Okay, let's switch gears completely. We're leaving the physical world behind and stepping into the more abstract world of paper silver. This is for investors who want to benefit from silver's price movements without having to deal with, well, a heavy box of metal.
In the paper world, the two biggest players are silver ETFs and silver mining stocks, and it's so important to understand the difference. A silver ETF, that's an exchange-traded fund, is designed to mirror the market price of silver directly. But a mining stock, that's indirect exposure. You're actually betting on the success of the company that pulls the silver out of the ground. So let's zoom in on ETFs. The pros are pretty clear. They're super easy to buy and sell on any stock exchange, and you don't have to worry about storage at all. But what are the cons? Well, you do have to pay small annual management fees. There's also something called counterparty risk, which is a very small risk that the company holding the silver for the fund could have problems. And maybe most importantly, you have to remember, you don't actually own the metal. And just to give you a couple of real-world examples you might come across, two of the heavyweights in this space are the iShares Silver Trust, its ticker is SLV, and the Abden Physical Silver Shares ETF, ticker SIVR. Both are built to track the price of silver bullion.
So what about mining stocks? Well, the potential for higher returns can definitely be there. If the company does well, your investment can really grow, and you might even get paid dividends. But, and this is a big but, the risks are totally different. Your investment success depends on company management, labor costs, government regulations, all kinds of things that have nothing to do with the price of silver itself. It's just not a pure play on the metal. Okay, there's one more corner of the paper-silver universe we need to touch on, and this is definitely the advanced section. Futures contracts. So what is it? Put simply, it's a legal agreement to buy or sell a specific amount of silver at a price you lock in today for a date in the future. It's basically a way to bet on which direction you think the price is headed.
And I really want to be crystal clear on this one. This is not a starting place for beginners. Seriously, trading futures is highly complex, it's incredibly risky, and because of the leverage involved, you can literally lose more money than you originally put in. This is a game for experienced professional traders.
So, we've walked down the tangible path, we've explored the abstract path, and now we're at the destination. It's time to figure out which path is the right one for you.
And here's probably the most important takeaway of all. There is no single best way to invest in silver. The right answer depends entirely on you. What are your goals? How much risk are you actually comfortable with? And are you investing for the short term or the long haul?
So, if you do decide to jump in, how much is reasonable? Well, a lot of financial experts suggest keeping precious metals to a pretty small slice of your total portfolio. Think somewhere in that 5 to 10% range. Use it mainly as that hedge against uncertainty that we talked about at the beginning. And that brings us to the final question, the one for you to answer. After weighing the hands-on security of owning physical silver against the sheer convenience of paper assets, which of these two paths truly fits your personal investment journey?
DGN Capital Management. Your success our priority.